Hello guys and welcome back on the channel. Today there is a new high win rate strategy to backtest, 70% win rate. This strategy it's very simple as the video says and easy to follow. But how does this strategy will perform over years of data? How many profits you can make with this strategy? These are all good questions and in today's video I'm going to answer to all of it. So stay until the end of the video to know how this strategy really performs. Spoiler, if you have seen the thumbnail of this video, you should have seen the plot of the balance rising up. So I don't want to say it, but there are some good results, but you have to stay until the end of the video to understand all of them. So let's start talking about it. Okay, the strategy will be backtested on these symbols, stock symbols, and on the 15-minute time frame. These are all the settings I'm using for this video, and for today's video I decided to reduce the commission for opening and closing a trade, because I found that in the previous video I used a too much high commission for each trade for a stocks market, and now I'm using a commission of like 0.5% of the money risked for each trade. So if you're risking like $10 for each trade, 0.5% would have been $0.05. Okay, now that I said it, it's time to talk about it. Here we can see the balance of the default strategy. I will leave anyway the link of this video in the description so you can then understand it how this strategy works. But as you can see, this plot it's not equals to the one I put in the thumbnail. As you can see, it's not so profitable, this strategy. And yeah, you're right, this is not the strategy I put in the thumbnail. So it was a scam, my video, it was fake? No, because this is the balance of the default strategy. As you can see, like 1000 trades, it almost break even and it's not good. So why there is this plot balance on the thumbnail? Because I decided to remove some conditions from the strategy, and it looks like removing these conditions improved the strategy, because this is the balance of the strategy with just one improvement. And what is this improvement? Let me show you some examples on the chart so you can clearly understand. Okay, the default strategy needed 3 indicators. So the first one is MACD, so this one. The second one, Parabolic SAR, so it is this one, and the third one, EMA, but we will not use EMA. In fact, the first condition I removed from the strategy was EMA, because I found that EMA reduced the number of trades and also the average success rate. So EMA was not a good, EMA 200 was not a good indicator for this strategy. So you will only need 2 indicators, MACD with the default settings, so this one, and Parabolic SAR also with the default settings 0.02, 0.02 and 0.2. Okay, now that you have these 2 indicators on the chart, you are almost ready to try this strategy. So what you will need? Let's look this buy trade. Okay, in order to open a buy trade, you have to check that the blue dot goes below the candles, and it must be above before, so here it happens. And in the same candles, you should have seen a MACD crossover, bullish MACD crossover, so blue line goes above red line. It can happen above the 0 line, below the 0 line, it doesn't matter. So as you can see, here there is the cross, and there is also the changing in the blue dots, so you can now open your long position at the last close, setting your stop loss to the Parabolic SAR. As you can see, 1-to-1 is a risk to reward ratio, and it would have been a success. Okay, let's watch another buy trade. In this case it was a fail, but as you can see, because fails there are there are. It's impossible to have a strategy with no fails. As you can see, blue dot above, blue dot below. We can see the MACD crossover in the same candle. You can open your long position at the last close, setting your stop loss to the parabolic SAR, risk to reward ratio 1:1. In this case, it was a fail again. I didn't mention that, but this strategy exit at market close. So pay attention. If the market close, you should close the position with this strategy. Now let's watch a sell one. Okay, we can see blue dots below, then blue dots above. MACD crossover, bearish, so blue line goes below the red line. Here it happens in the same candles. So you can open your long short position, stop loss the parabolic SAR, risk to reward ratio 1:1. Okay, these were the default this was the default strategy with the first improvement, so not using EMA. And as you can see, it performs already good. We can see 51.63 as our success rate, and it was profitable, and it was almost statistically profitable, as you can see. We can see also other information about these strategies. So we can see the max fails in a row. The max fails in a row were 18. So you can expect of losing 18% of your account in a row, but you can also expect to gain 15% of your account in a row. Okay, then we can see other information. For example, the number of buy and sell, it's almost similar, and we can see also that the number of buy, it's almost equal to the number of sells. So we have some good results and some results are not. So we can make some improvements surely. But before making some improvements, the first thing to check when you are trying to backtest a trading strategy is to check that the strategy is not overfitted from the starting point, because if it's overfitted from a starting point, it doesn't make sense to improve our overfitted strategy. But what does it mean to check if a strategy is already overfitted? Basically, you have to check that your confidence interval test is respected. So we can see the test dataset here is the average success rate on the test dataset is 51.02, and as you can see, it's in the confidence interval we have calculated before at 95% sureness. So it would have been located here, the test average success rate, so pretty good. We can say that the strategy is not overfitted. Yeah, the risk it's overfitted is always present. You cannot make it to zero, but at 95%, you are 95% sure that these two strategies are not different. Sorry, you cannot say at 90% sureness that these two average success rate are different. So we cannot say that. Okay, after we have done this first analysis and first improvement, it's time to download all the trades and let's see if we can improve the strategy. The number of trades is pretty high. This strategy has a good potential, and also on the stocks market commissions are not so high, so you cannot ignore it, but the commissions are less restrictive on your trading strategy rather than trying it on the forex market, in which commissions are really high. They are really high. Sorry. Okay, here I downloaded all the trades with all the informations, and for today's video, I decided to improve it with DMP and DMN crossover. I'm showing you also what is DMP and DMN. So you can go here, you search ADX, sorry, yeah, this one. So let me remove one indicator, okay, ADX and DI, so this one, okay. You will need only these two lines. So as you can see, a bullish crossover on the DMP DMN is when the red line goes above the red line, and a bearish crossover is when the red line goes below the red line. Okay, now that you know it, it's time to go back to the statistical analysis file and see the results. By checking it, what I have found? I have found that if you have checked for it, like in the last 10 candles, you would have proved the buy by a 0.5% win rate, and you would have lost not so much trades, and that's good. We have made a 0.5% improvement without losing so many trades. And for sell, it was almost the same thing. It was before it was 50%, now is like 51, 50.8, and also here you would have improved the strategy without losing too much trades. Probably you could have used also 33 as an interval in which to check for candles to open, but for today's video I decided to use 10, between 10, 15, but there are plenty of ways in which you can improve your strategy. So let's add these two conditions to the strategy here, and also let's take a look to the code. Here there was the condition on the EMA that I removed, and here I added the condition on the DMP and DMN crossover. As you can see in the last 11 candles, I'm checking it here for a buy trade, so bullish. Here we can see the check of the parabolic SAR, so the blue line, the blue dots must go below the data. Here I'm checking for MACD crossover, a bullish MACD crossover, and also in the last two candles, it must happen in the last two candles, the crossover, also here. And here we can see the settings for the order, so the stop loss at the parabolic SAR, the opening price at last close. As we can see, here we have the conditions for sell that are the opposite, but I'm going to show you anyway, so you can understand what I wrote. So here are all the conditions. But now we want to see if it's really profitable. So let's run again the strategy and let's see if it's really profitable or not. Okay, now we are talking. As you can see, you would have almost doubled your account by using this strategy. You would have lost some monies, but you would have also made some good profits. As you can see, the strategy was statistically profitable at 95% sureness. And let's watch also the number of max fails in a row, because this is important to know how much money you can lose by using this strategy in a row. And as you can see, you would have lost like 14% of your starting account in a row, but you could have also gained 11% of your not starting account, of your account from your balance. We can see, let's see, okay, here we can see the average success rate in buy and sell also. And we can also see that the number of trades was 1,300. It's not such a high number, but surely it can be improved. Maybe by adding new stocks, other stocks. Yeah, this can be an improvement. Maybe also we can also change other filters. We can try with other conditions. I don't know. It's plenty of way to improve a strategy. But in this way, you are pretty sure that you are not sure at 100%. But if you are doing things right, you are pretty sure that you can make some profits from this strategy by using the strategy as I'm showing you now. But now it's time to run again the strategy on the test dataset and check the most important thing. Is the strategy overfitted or not? Let's see. Okay, as we can see, 52%. It's in the confidence interval we have seen before? Yes, it is. So the strategy was not overfitted probably, but the most correct thing to say is that at 95% sureness, we cannot say that these two average success rates are different. Okay, Now that we have said that, we can see that you would have been profitable with the commissions and also without commissions, with commissions and without commissions. On the test dataset, the max failures in a row were, let's see, 8, and max success in a row almost 9. We can also see that the average success rate in buy is slightly higher than sell, but that is a good result from a statistical analysis. We have improved a strategy with these conditions, and we also had a good number of trades. I'm pretty satisfied with this strategy. I think that a good work was done on it. Not a good work, but it was done, a good work anyway. But probably the check on the BDMN was a good one, because we can see the confidence interval is respected. And also we have a good number of trades, not so high, but still a good one. But I said it again, as I said in other videos, I'm not a financial advisor, these are not financial advices, and this video was only for entertainment purpose. Trading is very dangerous, and I'm not responsible of any use of the strategies, of the strategy and the other strategies shown on the channel. Make your own consideration and pay attention. But if you enjoyed this video and you find that this content it's interesting and useful, I suggest you and I remind you to leave a like, leave a comment, subscribe, and see you in a next video for other trading strategies analysis. See you in other videos. Bye.